Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are about 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Massar and Tim Stenovec. Welcome to our audiences across Bloomberg Television, Radio, Quick Take, as well as streaming on YouTube. Taking a look at the broader market here, Carol, and right around the lows of the day here, the sell-off kind of intensifying as you get closer to those bells.
Hey, you know what Romaine has been selling off? That's the dollar. And thank you to the folks over at Bespoke, because they said after trading at a 20-plus year high back in late September, dollar index has declined over 10% in what has essentially been a one-way trip lower. And I think about the weaker dollar and how it plays out in earnings, Tim.
All right, well, speaking of earnings, I got my eyes on Netflix, down 3.3% right now. Some numbers to keep an eye on. Looking for 4.5 million total subscriber additions, revenue of $7.85 billion, and adjusted EPS of 42 cents. Scarlett, we expect to get those in a couple minutes.
And its losses just deepened as well. So it's trading at session lows at the moment as we await those numbers at the top of the hour.
What do you think about that 4.5? I almost forgot about that, Tim, that forecast they gave, because that was an incredibly bullish forecast, and they gave that last, October.
It was, and we're not going to see those forecasts anymore. The company's not.
All right, actually, we have some breaking news here right now on Netflix. We are learning that the co-founder and co-CEO of Netflix, Reed Hastings, is stepping down. Netflix's Reed Hastings is stepping down from the CEO role. Greg Peters is going to be elevated to co-CEO. It does appear Ted Sarandos, of course, who was already co-CEO, will also remain in that position. We are awaiting Netflix earnings, which were supposed to cross after the market close, but we are getting a headline right now that Reed Hastings, guys, is going to give up his CEO title. Remember, he was the co-founder of this company, which really goes back to, of course, the days of DVDs, if you remember, in the mail. Of course, turned it into a juggernaut of a streaming company, and really, Carol and Tim, just kind of took Hollywood by surprise.
Yeah, I just want to point out, Netflix, while we await earnings, the stock's already down about 3% in the after hours. Hastings saying in a blog post, our board has been discussing succession planning for many years. Even founders need to evolve. The board and I believe it's the right time to complete my succession.
Perhaps not that surprising, given that Sarandos just a couple of years ago was elevated to the co-CEO role. But what is surprising to me is that they're bringing another co-CEO in. As you mentioned, Romaine, Peters has been named co-CEO of the company.
And I think that's a key move here, too, because we talk about this move to the ad tier, which everyone wants to hear about in this earnings report. And we know Greg Peters has been a big part of that push and of the strategy, I should say, in sort of moving around that. So interesting that he gets, and now we do get the Netflix numbers themselves. We'll start off with the streaming figures here. 4Q streaming numbers. The net paid change, 7.66 million. The Street, Tim, as you just said, was looking for 4.5 million because that was the guidance that Netflix gave just 3 months ago, beating that by a mile here. Here's their forecast here for 1Q EPS, $2.82 a share. The Street was looking for $2.99. A lot of other numbers here, so jump in, guys, as you see them here. But overall, it appears on one of the key metrics people keep an eye on, those streaming numbers coming in well above estimates.
Also, fourth quarter revenue is $7.85 billion, pretty much in line with what analysts were looking for, $7.86 billion. Streaming paid memberships of 230.75 million, tops the average analyst estimate of 227.3 million. It makes you wonder why they're giving that net subscriber addition guidance if the last quarter they gave such a blockbuster number. But this is really all about this idea that they are going to deliver on profit rather than on subscriber growth.
I want to also say that they plan to resume share buybacks this year, which is always something that investors like to hear. Romaine, did you want to add?
Well, I just wanted to her point, though. I mean, I feel like this is kind of the Netflix of old. Remember, they would always give these forecasts, and they would either beat them by a mile or miss them by a mile, and everybody's like, what's going on over at Netflix? So maybe we're back to the old Netflix again.
All right, let's get into it. Let's get to someone who knows a lot about this company as well, one of our members of our team, Ed Ludlow. We're going through these headlines. First of all, that subscribers number, that definitely jumps out. What else for you?
Yeah, I mean, they beat comfortably, right, the 4.5 million estimate, 7.66 million subscribers. What was interesting is, you know, they're going to scrap this guidance going forward. They didn't say much about the ad tier or ad-supported tier, but they were saying that they're pleased with how that went. And there is evidence that cost-conscious consumers in this environment in particular did come to the platform in the final 3 months of the year. Looking at the stock, we're up 8% in after hours. Investors have short memories, right? They were down 3% on the Reed Hastings, stepping back, stepping down as CEO, and the reshuffle in management. We're now up 8% on the beat. So you have to ask what's more important. We knew this Reed Hastings development might come, right? 2020 is when we first had this reshuffle. Ted Sarandos elevated to co-CEO. What's actually more interesting for me is Greg Peters in all of this. He's a Silicon Valley guy. He is a tech guy. He knows what he's doing.
So what does that tell you, Ed, about Greg Peters being elevated to the role as co-CEO? I was particularly surprised of the idea that there will continue to be a co-CEO and two CEOs as well. I would have assumed that, Sarandos would have just been solo CEO. But is Ted Sarandos sort of the face of the company, the guy who's in Hollywood, and Peters is more of the operational guy?
Yeah, I mean, it's split function, right? Ted Sarandos is the Hollywood guy, making the deals on the entertainment and content side, whereas Greg Peters has been leading efforts, not just on advertising, but if you look at a lot of the sell-siders who upgraded the stock going into this earnings, the bullishness was around how Netflix is paced to deal with all of the issues this industry is facing. Yeah. They have an ad-supported tier that they feel is reasonably priced. Greg Peters leads that, but also they're cracking down on password sharing, which here in North America, in Europe, whatever market, it's an issue for consumers.
I'm going to interrupt you here for 1 second here, Ed, because we do have some other breaking news. Of course, the main headline on Netflix is Reed Hastings giving up his CEO title. We're now learning another CEO stepping down. This over at Texas Instruments. Richard Templeton, the chairman, president, and CEO, will relinquish the CEO role. Will still hold on to the chairman position. The COO, Haviv Ilan, will be elevated to the new CEO position over at Texas Instruments. So Texas Instruments, guys, getting a new CEO. And, of course, we go back to Netflix, Carol and Tim, getting a new co-CEO.
Well, exactly. And I think this is really interesting. And I was looking at Greg Peters, too. He was previously, before his current position, that he was really involved in international development. And when we talk about growth avenues, right, we think about how important this is, Scarlett.
Yeah, we absolutely do. I just was looking through the numbers, and a few more points I want to make here. Free cash flow, Netflix sees for the full year of at least $3 billion when analysts were anticipating $2.32 billion. And really, this comes with this renewed focus on profitability for these growthy companies. And that's where I want to bring you in here, because this is a company that must now prove to investors that it's incredibly disciplined on cost. And that includes things like spending on content, doesn't it?
Yeah, I mean, look, investors have been calling on Netflix to do this, and Netflix itself has had frustrations that the market was so zeroed in on the net new subscriber or growth statistics that they weren't looking to those traditional financial metrics. It's interesting on the $3 billion free cash flow target, they do say it's contingent on no foreign exchange swings. And the reason I bring that up is the international content slate has become so important for Netflix. Think about their market and content coming out of Korea, foreign language content coming out of India and other parts of Asia Pacific, Latin America. The other development in that blog is that Bella Bajaria, who is the global head of television, is now taking on a new role. She has a promotion to Chief Content Officer. So again, it's not just that Reed Hastings is stepping back as CEO and he is becoming executive chair. They had a pretty deep bench of talent, and they seem to be pursuing a strategy of promoting from within and leveraging the skill sets they already have.
Do you think, though, this is going to sort of placate investors, particularly with the pivot, Ed, that they're obviously trying to make to add tier? But more importantly, I think what we heard out of Reed last time during the last earnings conference, where they really kind of talked about this idea of the spend that most investors had come to expect, and the idea that that wasn't going to be sustainable going forward.
Yeah, the data tells us that actually they're winning on the content slate, right? If you look at third-party data, Netflix titles come out as the most watched for most of the months in the last 3 months of 2022, at a time where Warner Brothers Discovery and Disney, what was so interesting going into this is third-party data, Parrot Analytics being one example, actually showed that those competitors were taking market share from Netflix. Yeah. Well, Netflix still did really well to add those new subscribers, but the bullishness around this stock is the content slate in the first half of this year and the hits so far.
All right, Ed Ludlow, co-host, of course, of Bloomberg Technology, keeping an eye on Netflix earnings. We're going to be ping-ponging around, as we always do here during earnings season. Back to Netflix in just one moment, but now some breaking news crossing the wire on Nordstrom. JW Nordstrom coming out here with preliminary results saying that their net sales fell about 3.5% year over year in the 9 weeks ended December 31st. They're looking at full-year adjusted EPS when they report that's going to come in between $1.50 and $1.70 per share. The street was looking for $2.30 to $260 per share. So this would be a pretty big miss. Again, a preliminary announcement here. The shares are moving lower here by about 9% in after-hours trading. Keep in mind, guys, we actually don't get Nordstrom's results until, I think, the end of February, early
March 1st.
Yeah.
March 1st.
Yeah, I'm reading the commentary here in this release. Eric Nordstrom, the company's CEO, says, quote, the holiday season was highly promotional. Sales were softer than pre-pandemic levels. While we continue to see greater resilience in our higher income cohorts, it is clear that consumers are being more selective with their spending given the broader macro environment. The question is this going to lead similar companies to Nordstrom competitors to kind of see movement there, given what we heard from Nordstrom today about a weaker than expected holiday sales season?
Mirrors what we got from the retail sales data, right, in terms of some weakness later in December, although this is something that we've seen over the last couple of years. I will say on Nordstrom, about 23% of the float is shorted, so it's an interesting trade right now.
I'm just going to, break in again,
Please.
guys, as I always do here. This now on T-Mobile, crossing the wire here. T-Mobile, of course, remember, had a significant security incident, says that it now expects to incur a significant expense related to that incident. It doesn't appear that they're actually quantifying that expense, but they are saying that it will be significant in nature. No shares, Scarlet, right now moving a little bit lower here, 2% lower in after-hours trading.
That sounds like a surprise to the downside for T-Mobile coming up. All right, let's get back to Netflix for a moment here, because we are seeing those shares jumping in the after-hours trade, along with some of its peers, such as Disney, Roku, and Warner Brothers Discovery. So I want to bring in Geeta Ranganathan. She is the U.S. media analyst for Bloomberg Intelligence. And Geeta, you've had a chance to look through some of the numbers for Netflix. That 7.5 million subscriber ad is pretty stunning, over 7 million versus the consensus estimate of 4.5 million. I know we're not going to get these numbers anymore, but what does this tell you about how Netflix is set up for this fiscal year?
I think it's set up really, really well, Scarlett. And 4Q has traditionally been a seasonally strong quarter for them. And what they've done really, really well in terms of execution, both in the third quarter and the fourth quarter, was a steady cadence of content hits. And they mentioned some of these content hits right off the bat, whether it's a Wednesday, whether it's a Harry and Meghan series, the Knives Out sequel, Troll, which was one of their non-English language films, all of these being some of their best hits ever in the history of the company, and all of them came in 4Q. And I think what this tells investors is that they have a steady stream, they have a steady pipeline of more and more hits, more and more predictable hits, not just a sleeper every once in a while, but more and more predictable hits that we can expect to see on the service. And that gives us confidence now that they should be able to monetize that, whether it's through paid sharing, whether it's, with the ad-supported tier and other efforts.
Well, and okay, so Score on the content side of things, Geeta, that ad-supported tier, what kind of color did we get on that? What have we learned, and what are we waiting for on that?
So we haven't got any, facts or figures. We've just got some commentary saying that the launch has gone really well. The investors, the interest from the advertising community has been really strong. And the fact that they haven't seen many customers spinning down, so there hasn't necessarily been a cannibalization of their core product. That is something that they called out in the letter, but there's been no actual numbers around how many subscribers actually took the product or what the number of,
Is that a problem
dollars
to you?
were.
Is that a problem to you that we don't have that?
It's not.
Okay.
Eventually, we do expect to see them kind of disclose that as a separate line item, probably going out after maybe in the second half of 2023, but it's still very, very early days. So this was expected.
All right, and I do want to get your thoughts here on the leadership changes. Of course, Reed Hastings stepping aside, Greg Peters elevated to that co-CEO position alongside Ted Sarandos, and digging deeper down the organizational chart, Bella Bajaria now becoming Chief Content Officer, of course, a former president over at Universal Television Group. And then you also had Scott Stuber being named chairman of Netflix Film. Are you comfortable right now with the leadership team there?
Absolutely. They've been preparing for this for a very, very long time. So right in 2020, Reed Hastings kind of saw this coming. He elevated, Ted Sarandos to the position of co-CEO. And Greg Peters has really been such a core part of the, the whole strategy, whether the product strategy really, like, introducing gaming, introducing ads. So he really kind of knows the product well. And this is such a great example of how succession planning should be done, right? In stark contrast to what we're seeing at Disney, this is really, it gives you, it's kind of sets the playbook of how it should be done.
Gita Regnathan, U.S. media analyst.
So you're saying you don't think that Reed Hastings is just going to come back after 2 years? Is that what you're saying?
I mean, maybe
don't answer that, Gita.
Feels like a deep bench.
Maybe when Jeff Bezos comes back to Amazon. Okay, big thank you to Gita Regnathan over at Bloomberg Intelligence. Really appreciate you taking the time. Well, for more now on Netflix is John Ehrlichman of BNN Bloomberg. He co-hosts Bloomberg Markets. John, good to have you with us this afternoon. You've had about 12 minutes to dig into the numbers. We talked about the leadership changes. We've talked about the company's blowout sort of a number when it comes to paid additions. What else sticks out to you?
Well, I think just the whole picture in the sense that this is a company that has always had a unique way of approaching an earnings report, including with their conference calls, and we'll wait for more details on that. But after the year that Netflix just had, they get it. They know there are concerns about the competitive environment and the challenging subscriber growth questions that really pummeled the stock over the course of 2022. And so you look at this storyline where they can say, look, we can meet the revenue expectations. Yes, we are moving away from the subscriber guidance story, but we're going to let you know what's going to drive those subscriber numbers going forward, giving you that taste on how the ad tier is going to play out. Hopefully we'll get more details on that, Tim. But, you know, I think as we heard from Geetha on the succession plan, if you now have a handing of the baton from Reed Hastings, already Ted Sarandos in that top position, Greg Peters, a product specialist moving higher, and Bella Bajaria. Don't forget, guys, the New Yorker did a very interesting profile of her to start the year, kind of piecing together the Netflix global story.
Hey, one thing I want to ask you, because initially we saw Roku, Warner Brothers, Paramount, Walt Disney all pop right after these results. But I'm looking at it now. Disney looks relatively flat in the after hours. So we're seeing kind of a pullback on that. Is there anything, John, that we can read in terms of the Netflix results into the rest of the streaming world?
Well, I think the ad tier update is an important one. Now, as Geetha noted, we didn't get any specific numbers, and maybe we'll get more color on the conference call, but they were very specific to say, because remember, there were a few reports out there that advertisers weren't necessarily getting the bang for their buck that they initially thought they might get when they first rolled that out. What the company is saying is engagement for anyone who's using the ad version has been good. And to Geetha's earlier point, people are not necessarily switching from a paid membership to an ad-supported. So that is a message to anybody else out there that we can claim more users and not cannibalize our own users. So that becomes, is that a positive for the industry, or is it a message to the other players that Netflix is ready to hold their own? And then I think the other thing that's going to be really interesting to watch, you guys alluded to it a little bit, but the whole password sharing crackdown, which I think, and they were very clear to say, look, we're getting the succession roadmap together here. We met our numbers. We know it was a tough year. We're coming back. We're focusing on the ad-related business, which is new. But the first quarter, we're going to really get into the specifics of that password sharing business, which we believe is going to help the financial picture, even if some people decide, you know what, they're not going to use the service, albeit it was a free option for those people. And so this is a very well telegraphed message to Wall Street that we are ready to play. And it's been very interesting to watch this stock. As you guys know, it's up about 100% off the lows from last year. So.
Yeah, one of the better performing stocks in the second half of 2022. BNN Bloomberg's John Ehrlichman, thanks for giving us your take on the Netflix results. And I'm so interested in the fact that John mentioned that password crackdown, because that's not how Netflix uses it in its that language in its release. It calls it paid sharing. So
that sounds like corporate
It's all about
speak.
framing, right, Scarlet?
Right. Talk about euphemisms there, but it adds to the idea that it can show that it's growing subscribers by just converting some of the people it's cracking down on to this paid sharing tier, which presumably is at a lower price point than a brand new account. And it's going to start off in Latin America and eventually expand its way towards North America and the rest of the world.
I got to say, it does feel like a different Netflix. Is this the post-pandemic Netflix? Are we starting to see some clarity on that? And this is the model going forward, right? We had a lot of optimism in October when we once again saw, growth in those Netflix subscriber numbers. And this was just a blockbuster number here, Romaine.
A blockbuster number here. I'm always just going. I'm kind of the half glass empty kind of person.
Wait, did we get? That is almost not quite double, but a lot more.
Okay, well, there you go. All right, so my point I was going to make is that when you sort of look at the year as a whole here, you're still talking about a slowdown in growth. And I think that when we talk about just how much this stock got decimated last year, it was really because of that longer-term growth story. The idea that, yes, you're going to have these sort of incremental jumps in subscriber growth, particularly when you're switching people out or trying to push them out of auto password sharing into these new plans. The question is, how sustainable is that on a quarter-to-quarter basis going forward? I guess that's not a question for Reed Hastings anymore. That's more for Greg Peters and Ted Sarandos.
All right, for the glass half full, Romaine, Netflix is still down more than 50% from that November 17, 2021 high. Does that make you happier?
No.
Okay. Anyway, it is definitely a high flyer in the aftermarket. We'll keep a watch on it in the Friday trade. Great coverage, guys. We got our wrap it here. Our cross-platform coverage on Netflix and the market close beyond the bell. Radio, TV, YouTube, and Bloomberg Quick Take. We will see you again, same time, same place tomorrow.